Welcome to the Real Estate Players Podcast. My name is James Wilson, commercial lender with Old Capital.
And I'm Joe Pizzuro with Break Chain Capital. And today our guest is Brandon Wong, the founder of Smart Syndicator. Welcome, Brandon.
Thanks. Appreciate that, Joe and
Good to
James.
have you and good to see you again.
Yeah, good to see you.
Yeah, what's been
So,
going on?
yeah.
Yeah, I mean, just keeping super busy and raising capital and, building out my ecosystem at Smart Syndicator.
So James and I know you, of course, but for the viewers, maybe give them a little background of how you got started and what got you to where you are now.
Yeah, it was actually kind of a weird moment when I got started in real estate investing. I was deployed to Iraq. I was in the Marine Corps from 2003 to 2011. And when I was deployed, a buddy of mine sent me a copy of Rich Dad Poor Dad. And that was my light bulb moment. I remember reading that book during a sandstorm, and I was like, dude, I've been lied to the last like 20 something years about, how this country works and how the economy and, how to build wealth. And so I vowed, when I got back, I was going to get out and start investing in real estate. So I jumped in with both feet and didn't know what the heck I was doing. Partner with a buddy of mine who's a fellow veteran, and we lost like 5 grand on our first deal. It was a flip at a foreclosure auction in Las Vegas. And mind you, the timing of this, I got started right after the mortgage meltdown happened. So there was just a ton of opportunity in the distress space, particularly on both residential and commercial side of things. I remember talking with some of these banks, and they would send us what's called a tape, which is essentially a list of all the assets they have on their books they're trying to get rid of. And I remember seeing like 350 unit apartment complexes and 52 unit apartment complexes alongside all of the residential stuff. But at the time, I couldn't fathom buying something that big, or my vision was much smaller than it is now. But we did buy non-performing notes. My partner and I bought non-performing notes in 22 different states, and these were all on residential properties. I want to say the average property value was like 90,000, 90 to 100,000. So these weren't super like high-end homes or anything, but that's how I learned real estate investing in the beginning, is just jumping in and starting to just do things and make mistakes. And so that was an interesting experience, uh, working with banks, seeing that whole distress side of things. And hopefully we don't see that again. I mean, I guess as a buyer that would be advantageous, but that's how I got started in real estate investing. And then fast forward to 2015, I started investing passively in apartment deals, got some professional education, and then fast forward a couple more years, I started investing as a general partner and raising capital, putting deals together with partnerships. So that's the 2 minute version of my story.
Tell us about your veteran group. How did that
Yeah,
start and what are you trying to do with that?
Yeah, we
yeah,
thank you
it's
for this.
yeah, no problem. Yeah, and I know you're a fellow vet too, James. So the veteran group came out of a business networking function that I put together. It's a local meetup here in Dallas Fort Worth called Veteran Circles. And I've always had just a real estate interest, real estate background. But the Veteran Circles was designed just for business, like veteran business owners and patriots that own local brick and mortar businesses here in DFW. And I wanted to create an avenue for veterans to transition out of the military and start investing in real estate. And so the knowledge is often the biggest gap, followed by funding and skill set and that sort of thing. But that was the impetus behind what I created called the Veterans in Real Estate Summit. We just completed our third one. It's an annual event, and it's just a ton of fun. I've gone to events in the past that were just straight up pitch fests, where people were trying to upsell you to their 5 and 6 figure coaching programs, and I'm like, dude, I don't want that at this group. I want a group of experienced veterans that are doing big things in the real estate space to just share and impart their knowledge and experience and create meaningful connections with other veterans in the group. And that's what we created. And It's been a blast. It's always super stressful putting those things together. I know you guys just did your annual event, but
Those
uh
conferences need a
feel
lot of work.
like
It's always a
there's a lot more gray hair. I've cut a lot more gray hair because of it, but it's very fulfilling to actually have the event, you know. So I'm sorry I got off on a tangent.
Oh, um, I have a similar background to you with being in the military and reading Rich Dad Poor Dad. That's how I got into real
Yeah.
estate too.
Was it in a sandstorm?
No, I was not in Virginia. Uh,
It
you
was
also
eating lobster in a hotel room in a condo. You're in the Air Force, right?
no, I was in the Navy. There was definitely some mold in there. You also have a great platform that you've built. I know you're a big systems guy. Tell us about Smart Syndicator.
Yeah, it's a product that I developed for myself first to raise capital for my deals. Is what I realized is that a lot of investors struggle, including myself, with a small investor database when they first start out. They have like multiple systems like Calendly, Active Campaign, and a lot of folks are not technically savvy, and so it creates a barrier for them to raise money, because on a lot of things happen online, they happen via email, via text message these days. And yes, you can, and I know people that raise capital very successfully just picking up the phone, you know, but for the vast majority of us, that's not always enough. And so we have to have a strong online presence, automation to augment our efforts, and sending out regular communications. So that is all stuff that Smart Syndicator helps with. Is we've developed a very systematic way to approach capital raising, and we have a ton of templates, email, text message that have been, tested in battle, and we've used them to raise capital.
So is it something that works in tandem with your CRM or it could replace your CRM?
So it replaces your CRM and a ton of other technologies as well. This consolidates them all into one.
Very cool. Would you consider it for any level of experience, or is it more for new or established syndicators, or all of the above?
That's a great question. It tends to be more valuable for people who have felt the pain and the stress of raising capital before.
Mhm.
So typically, if you've got at least 1 to 2 deals closed, then it tends to make a little bit more sense. We do have members that are newer and don't have any deals that they've completed, but they are investing heavily in personal and professional development and coaching and learning how to actually buy these commercial assets. But the people who are the most successful are those that take action just in general.
Yeah, what do you find is the biggest challenge with capital raising? I know it's challenging out there to begin with, but what do you find
hmm
is people have hurdles with raising capital?
Just being systematic about it and having an approach. So, uh, particularly like on my first deal, I was just calling people in my phone that I thought had money, and I ended up leaving a lot of money on the table doing it that way. And I think just not knowing the approach and then also not being compliant in the way that they're raising capital. So I've seen posts on Facebook for a 506B, and I'm like, dude, what are you doing? I send them a private message. I'm like, here's a link to the regulations on this. I'm not trying to be, mean to you, but read up on this. Don't want you to get in trouble. But
Basic.
being, yeah, systematic about it. And it doesn't help that there's an election around the corner here as of this recording. So that's raising capital right now. Like you're going to get a lot of people. I want to wait and see how the election goes.
Yeah.
So that's
Yeah.
one of the biggest hurdles right now.
Yeah, I saw a post on LinkedIn. They said the same thing last election before that. Everyone waits to
Yeah.
see. Usually
Yeah.
people still invest or they wish they had invested. So
The good news is there's about 2 months between the election and the end of the year, and there's 60% bonus depreciation still. So I think, it should get easier shortly after the election. You know, People are trying to place capital to take advantage of that.
yeah, I'd like to see how that works out because it has been taking a long time to get deals.
Yeah.
And then I heard from an agency lender, they said that uh, 60 days is the new 45. So
Yeah,
back,
not.
there's really only one bucket of money with the agencies, and everybody wants to,
Mhm.
most people want to use them, so they're taking a lot longer, doing more due diligence.
Yeah. There's also a lot of damage, collateral damage from the interest rates going up,
Yeah,
of people losing their money in deals. And so the word's getting around about that, like, hey, there are risks associated with this. And granted, it's happening all through the entire spectrum from newer syndicators to Blackstone. Like they're everybody, I mean, Blackstone can cut a check to make it up, but a lot of people can't, you know? So
yeah, I'd be hard pressed to find anyone that said it's been a good cycle for them.
yeah, everyone's got a deal or two that's just kicking them in the butt, and the investors are feeling it. So it's hard to go back to your existing investors for a new deal if you have a deal that's struggling, you know? Not that it won't happen, but it's challenging.
What are some of the other challenges recently besides raising capital that you've experienced? Maybe not just from Smart Syndicator perspective, but
Yeah.
just in general.
Yeah, in general, just managing expenses, it's kind of a common thing across the industry. I know a lot of other people are struggling with it, but property taxes, insurance, payroll, everything's kind of like
Yeah.
so far above our pro forma. I'm like, dude, what's going on here? But I feel like that's a common challenge. I don't know that I have a unique challenge that other operators aren't experiencing.
So you first started out doing single family, and then you saw
Hmm.
multifamily, and then you eventually got to investing and syndicating. What were like the
Hmm.
first deals that you looked at when you came in, and kind of what are you looking at now as far as syndications?
So with syndications, when we were first starting out, we followed our coach's sort of guidance in terms of buying something big enough to support on-site management, buying something in a landlord-friendly state, business-friendly state, in a market that is expanding and growing, just to create a lot of tailwind, showing positive rent growth, uh, and something in the B2C class area. So fairly vanilla deals is what we're looking at in the beginning. Fast forward to today, we're actually syndicating via a fund of funds. There's a couple of asset classes we've expanded into, which is not unusual in today's market. It's just a lot of folks are looking for yield. They're looking for cash flow, and if that's important to you, it's a little bit challenging, particularly in the markets we're looking to get that with apartments. And we still wanted the tax advantages. We will still want equity growth and cash flow. So that's one of the reasons we stepped out of the asset class. And took our approach has changed as well. As in the beginning, we were more like, let's be the operators, let's get this done, let's do it ourselves, let's build a team. Now it's more we're more shifted towards finding operators that are already super experienced. They've been doing it for 20 to 30 years. They've got tons of full cycle experience. And those are the people we want to partner with and invest alongside and raise capital and oversee their operations as opposed to us kind of doing it ourselves. And I mean, Joe's done an amazing job on the deal that I'm partnered with him on. And it's uh, I just don't necessarily want to be a part of the day to day as much anymore.
Yeah,
Call
that's
call me
gonna
a
be,
recovering operator. I don't know.
it's gonna be a good story coming out of this downturn. That deal,
Yeah,
pretty good.
yeah.
What are some red flags that you see in deals that you're looking at now? Is there like any immediate disqualifiers? What do you kind of dig into for due diligence?
Well, in terms of deals, we want size and scope, and we're looking very closely at the operators. So we want deals that, for instance, we have an oil and gas project in New York that's it's 40 wells. So typically, oil and gas is historically very risky and speculative. So if you're investing like a one or two well project, nothing's a sure thing, but it's even less so when you're dealing with small. It's like investing in a single family home, and then the tenant stops paying you. Suddenly, you've got all these expenses and nothing to show for it. So size of the deal The track record of the operator. So we want to make sure that they've been doing it, as I'd mentioned, for many years and have a ton of experience producing results. Again, it's not a sure thing, but it's more sure than investing in somebody who's just getting started. So I mean, we were all there at one point, just getting started. So it's just we're not looking to invest in deals that people don't know what they're doing.
Yeah, it makes sense. Is oil and gas considered a real estate play with the land? You get any depreciation or well, you can't
We're
depreciate.
depreciating the equipment and then we're getting what's called depletion on the because oil is it's a finite resource, right? It runs out of a well eventually. So there's a depletion component which you use against the cash flow generated by it. And then there's tangible drilling costs and intangible drilling costs, which are unique in that they can be they can offset W-2 income. That's one of the reasons we incorporated them into the portfolio because so it's not a big depreciation play. It's just it's different. It's tangible and intangible drilling costs, and we wanted to create an opportunity for W-2 income earners to be able to offset some of their income. And the other component, so we had two different asset classes, are car wash development, and that is where the depreciation comes into play. Once these sites come online, they and you get certificate of occupancy, then you get the depreciation. Depending on where it's at that in the year that it comes online, because I know it's declining, right? That depreciation is going away over time, but we'll see.
60, 40, 20,
Yeah,
0, I believe. And then
yeah,
there's apparently a bill that it's on the
yeah,
table, might get passed, but we'll see. We'll see what happens.
I think that's waiting on the election too.
yeah. It was shot down, but then it'll probably come back alive after the election.
Yeah, I think
I
Congress,
believe,
real estate.
yeah. Everybody likes real estate. It doesn't matter if you're red or blue. We all love real estate. It does awesome things for us.
What's your goal in the next 5 years? Where do you want to?
Um, so I'd like to finish closing. I want to close out this capital raise. Our fund is structured to raise up to 25 million. Have all those funds deployed into various asset classes. We've handpicked a couple, and we're always building out our list of operators. So if there are any operators listening to this that sound like they might be a good candidate, feel free to shoot us a message.
Yeah, and that's kind of a segue to our last question here before we
Hmm.
go. Who are some of the viewers you would like to uh, give a message to, and how do they get a hold of you?
Yeah. So operators that are raising capital that need to systematize better. We can talk about Smart Syndicator, and then people that are looking to diversify outside of multifamily and get into other asset classes with experienced operators. Then they can message me about that.
Awesome. Well, thanks, Brandon, so much for coming on the show. Joe, you got any final thoughts?
No, appreciate it, Brandon. We're look forward to watching what you do here and seeing what you do with Smart Syndicator. And thanks for joining.
Yeah, not a problem.
Thanks for watching, everyone.
Thank you.